Hi, good afternoon. Welcome to Sunday Trader Talk Radio. Today we're going to explore a little bit about the US dollar, and what I want to check in about is the correlation between the US dollar and the US 10-year Treasury yields as something we'll look at today. So last week we had a couple of data that came out. We had the Euro. I think the Euro CPI flash estimate, we have the Australia GDP Q quarterly report that came up slightly lower than it's expected. Canadians overnight rate remained the same, and then we had the Europe refinancing rate, or the interest rate actually dropped a little bit, but it's already priced in. All right, USD unemployment claims popped up just a little bit. And of course, we have the US unemployment rate remaining flat. And what is something that we'll be looking at as well is the Canadian unemployment rate actually popped up a smidge. So what we want to look at kind of today is really the correlation between the US dollar and the US government bond yields. Now, generally, there is often a positive correlation. However, it's not always constant, and there are various factors that kind of affect this positive correlation. So when US dollar treasury yields increase, they actually offer, or it's perceived to offer a more attractive return to investors, especially foreign investors, because to purchase treasuries, foreign investors must buy the USD, and this kind of increases the demand for the dollar and strengthening its value. Now, this is one of the primary drivers of the positive correlation. So higher yields from the US dollar attracts capital, which actually boosts the dollar. Now, when we look at this, this is a weekly chart. We have the US dollar index on top and the US government 10-year yields, the 10-year bonds below. So if we put it here, now you can see there is a little bit of correlation, the way the government bond yields move and the US dollar index moved, okay? And over the last couple of years, the correlation or the relationship has been changing slightly as well. All right. So when we talk about the increase in the, we talk about the correlation, we really have to kind of see how sensitive it is, the US dollar is to the price moves of the government bonds. Now, when I look at the US dollar 10-year yields, normally the currency pair that we actually do want to trade is actually the US dollar Japanese yen. So this is swapping it over here where you can see the correlation a bit cleaner. Okay, and let me go to the US 10-year US dollar Japanese yen. Okay, so you can see the US dollar Japanese yen. All right. Not it's not super correlated all the time, but usually it kind of moves quite in the US dollar 10-year yields actually kind of leads the movement for the US dollar Japanese yen. So you can see over here, let's just look in July. July when the USD 10-year yield starts to drop, you can see over here, right? And then the US dollar yen starts to push down a bit, and then the US 10-year yield start to go up, and then you see the USD Japanese yen going up as well. So the correlation here, it's quite because it's quite obvious, a little bit more obvious. When I'm going to draw this, and then there's a move up, and then there's a little V dip here, there's a little dip here. Okay, and then of course, if we continue on this trajectory, you can see the correlation happening again. So when we kind of zoom in, this is a daily time frame. Okay, this is a daily time frame. Okay, price, maybe it's a bit change, it's cycling back up already, and it looks like it's cycling back up. So it's a little bit of a US dollar government bonds leading the US dollar Japanese yen pricing. Now, the reason why I'm looking at the US dollar this week is because in the news there are talks about stable coins. Now, yes, we're going to jump to crypto for a little while because stable coins as in crypto stable coins are getting a lot of attention, and I think it's because of how stable coins kind of work that there is a little bit of a question mark that's coming over there. So stable coins by definition is slightly different from crypto in the sense that it has a peg against a a something. So for example, USDT is the stable coin is pegged to the US dollar. So with stable coins, the promise is that a dollar is a dollar. They are meant to be backed one for one with reserves of equal value. So the holders of stablecoin do not receive interest, but often the operators do due to the, billions of dollars a year, in fact, or any adjustment for inflation, because they are the ones backing the stable coins with a dollar for dollar value. So which means if I am an operator, I sell you $10 worth of stable coins. In my pocket, I'm also backing my value of $10 stable coins with $10 worth of US dollar, for example, for USDT. So it doesn't sound like much at this point, but when stablecoin money comes in, the impact on short-term government debt prices is about 2 or 3 times larger because of whoever holds the short-term debt. So coin operators now hold a lot of short-term US debt, in comparison compared to, for example, we used to say that the holders of US debt, which means US treasuries, a large proportion is held in China. But stablecoin operators are now taking over, and they are holding a lot more uh, US debt in that sense. So for example, between I think stablecoins and China, I think they've already bought 40 billion worth of treasury bills in 2024 itself. And of course now we're talking about stablecoins a little bit because there are talks on regulation, there are, and what happens when this demand going up. So if a lot of people are looking at stablecoin due to the Bitcoin move, and of course Bitcoin has gone up all the way to I think 100 above 100K. And there's this, of course, if you want to hold Bitcoin, sometimes it's easier to trade Bitcoin by, swapping it with stable coin, right? Because you go BTC USDT, it's easier than taking cash and buying the Bitcoin and then coming out in cash again. So the pair that usually moves the Bitcoin currency, the Bitcoin price is Bitcoin slash USDT. So this is why, this calls for, the Trump, that Trump is kind of related to the whole Bitcoin saga in the sense that any regulatory statements he makes is going to affect the demand and the prices and all that. And of course, downstream, it will also affect the demand for the US dollar because of the demand for the treasury yields, right? So it's like kind of a domino effect over there. So this is why when we look at um, the US dollar what we call it, the strength in the current climate, we kind of have to figure out where is the demand for the US dollar coming from. So over here is Bitcoin. Okay, Bitcoin has popped up all the way, this is daily time frame, all the way to hit about 112,000, now back down to 105,000. Now, I'm not so much interested in the price of Bitcoin as more of the demand for Bitcoin. If you want to buy the Bitcoin, what is the procedure? The procedure usually is first, you take your US dollars, all right? You take your US dollars or whatever currency that you have, all right? You take your US dollars, or if you are in Australia, you take Australian dollars. You're going to sell the currency over here, and then you're going to buy. Okay, very often, they start off with buying USDT because first you have to put the USDT, which is a stable coin, into your crypto wallet, right? So whatever currency you use, you're selling it, and then you're buying USDT. You're going to put this in your crypto wallet. And then after, when it's your crypto wallet, then only you kind of exchange it with, or you kind of sell it and transact into Bitcoin. So this process is what usually Bitcoin traders or Bitcoin buyers do. And what is the effect of this is the operators who actually provide the USDT stablecoin, every time they sell USDT to those people who are buying it, what they need to do, they are going to back it by holding a certain amount of treasury bills as well. I mean, I'm not sure what is the time range. It can be 2-year treasury bills, 10-year treasury bills, but definitely the treasury bills yields are something in play, right? So if I was a Bitcoin, or if you were a Bitcoin operator, and if there is an increase in demand for the USDT, you need to back your stablecoin, because that's the purpose of stablecoin. What you're going to do, you're going to hedge, you're going to trade in the US yields, and this is what's going to happen. So there's this huge demand coming in for treasury yields from stablecoin operators. And what this tells us is, it tells us that when we look at the DEX, the US dollar interest rate, when the US dollar is so cheap, okay, when the price of the US dollar is so cheap and the price of Bitcoin is so high, what's going to happen is there's going to be a move in one direction. Either people are going to sell off their Bitcoin back into USDT and then from USDT cash it out into US dollars to spend, or they're going to speculate and they're going to want to buy more Bitcoin and then they're going to increase the demand for stablecoin, and it goes either way. So there is some volatility in the US dollar also due to the crypto trade over there because of the increased demand or the increased attention Bitcoin trading has in the market right now. So if we were to look at the USDT over here, price has gone down all the way now to about 99.202. You can see the huge push towards the downside ever since Trump took over. Now, Trump wants a weaker dollar. He has got a weaker dollar. It has gone down effectively more than 10 points, $10, or from 110 all the way to 99, slightly more than about $10, 10 units in terms of the US dollar index. So what this means is in relation to where price was in the last couple of years, US dollar is kind of deemed a bit cheap, right? It's cheap. It's kind of cheap right now. Whether or not it will go below par value all the way down to 89.95, we are not sure. So if I use the US dollar yen as a gauge, all right, what's been happening in the US dollar yen price has been testing off the support level of 141. Now this just happened somewhere in mid-April. Price bounced off the 141 level mid-April, cycled towards back up, came back down, didn't quite hit the low, bounced off about 142, and now headed back up against US dollar yen. So I suspect if and I think if you observe the news, you will see Donald Trump trying to convince the Fed to lower interest rates, right? So he is trying effectively to further weaken the US dollar. He wants to do something over here, and we don't know whether the pressure will be effective or not, but what it looks like there is a good probability for the US dollar to hit back up, at least maybe towards the 150, 151 level. So this is a short-term US dollar play. In the interim, if nothing changes, if the Fed holds its stance against Donald Trump and does not drop the interest rates, then we might possibly see a slight pop in the US dollar. So what I'm looking for is opportunities to go long on the dollar yen, maybe first towards the 147 level. Then if it can break the 147 level, we hit towards the 150 level. And if it can break the 150 level, maybe towards the 151 level. Again, all this is in contingent with the policies that are coming up from the US. So very volatile trading, which means, we want to really use our technicals to kind of figure out where to enter and where to exit, right? And again, speaking of the US dollar, if there's potential strength coming in the US dollar, the dollar sink, which I've been looking at for the past 2 weeks now, is kind of showing signs that it might possibly be ready to slowly cycle upwards, right? So we had that touch off the 1.28 level over here. Price headed back up, tried to come back down again, and it gave me a higher low over here on the daily time frame. All right, now, if this trend line holds, so if price continues to bounce off this trend line, continually giving me small higher highs, higher lows, then I think small risk buys over on the dollar sink will be possible. And of course, I prefer to you kind of look at it on the shorter time frame. So this is the 4-hour time frame. Now the 4-hour time frame doesn't quite convince because I'm not quite liking the way this area is actually ranging over now. So we might have a higher low over here on the bigger structure, but over here this is the question mark. All right, so what I want to see is I want price to break above this area to show me that, okay, even on the 4-hour time frame we have cyclicity. So if the 4-hour time frame can give me cyclicity to give me continually higher highs, higher lows, then I think small bias towards the upside can be accumulated. So this is how I plan to trade the dollar sink. And again, dollar sink moves quite slowly. A lot of times it tends to range. And what is on our advantage right now with the dollar sink is that if you're using your JDR securities trading account, it gives you positive swaps. So it's okay to slowly accumulate small risk buys over here. No big risks, no big lots, of course. What we're looking at is to kind of figure out where we can time the early entry into the dollar sink move, and eventually the exit point would be, of course, the first point of TP will be 1.30, which used to be my point of purchase. All right, I used to want to buy at 1.30, but price has been hovering below 1.30, so my first target exit is 1.30 here for a small partial TP probably, and if price can break above 1.30, then we'll hit up to the 1.31, 1.32, and of course long-term target is actually nearer to the 1.33 side over here. This is on the daily time frame. Okay, so this is a daily time frame, and you can see the longer view time frame is to eventually hit all the way to a mid-range level of 1.35, which is where the US dollar sink has been living for the past couple of years. So this is an area where I feel the Singapore government might be comfortable allowing the dollar sink to live in at least in the medium term. All right. But of course, to be able to reach a point of stability, we have to get past the volatility of the US dollar, and for that, price kind of needs to pop back up first. All right. So we are at the turning point now. And if it doesn't, there is also a small probability that price, if this structure doesn't hold over here, price might break below the 1.28 level and cycle maybe towards the 1.26 over here. So again, this is a little bit it is not a very safe place to trade right now. I really do need to see the market structure change over here. Really need to see that there is going to be more demand for US dollars due to the Bitcoin trade, the Bitcoin, the Bitcoin market as well, and to be convinced that there is a demand for US dollar before, we want to pile in the risk on this one. So the first 1-2 trades, keep it at a small risk, and then later on, once confirmation is in, then only we are more comfortable scaling in. All right, so that's all for me this week. This week is really about the US dollar, kind of seeing where we are at in the mid-year mark. And with that, I'll end off this video, and I'll see you guys in the other streams. Cheers, everyone, and